We spend a lot of time talking about the demand for silver, for solar panels, for EVs, for all that new tech. But none of it matters one bit if you can't get the metal out of the ground. Today, we're going to do something a little different. We're running a full forensic investigation into the supply side, and we're zeroing in on a crisis brewing in the one country that matters most, Mexico.
So, let's just let that sink in for a moment. For 500 years, Mexico has been the absolute epicenter of the silver world. But what we're going to show you today is how that's all coming to a sudden and very deliberate end. Now, this isn't some minor dip in the market. No, we're talking about a fundamental, systematic breakdown of the world's most important silver supply.
And to really get your head around the scale of this, you just have to look at the numbers. Mexico is, and this is no exaggeration, the Saudi Arabia of silver. It's responsible for nearly a full quarter of the entire planet's annual production. So think about that. What happens when a supplier that big just goes offline? The shockwaves are going to be felt everywhere.
And that, right there, is the million-dollar question. It's the central mystery of our whole investigation. See, this isn't a case of a mine running dry or some natural disaster. This is a deliberate political act. We're about to uncover exactly how a few decisions made in Mexico City could be about to trigger a massive global supply shock.
Okay, so we've examined all the evidence, and what it points to is a coordinated, three-pronged attack. It's a siege that's strangling the Mexican silver industry from the inside out. We're talking about a combination of legal, financial, and physical pressures that together are proving to be absolutely lethal. Right, so these three things aren't happening in a vacuum. They're all working together, creating a perfect storm. It's not just one problem here or there. It's a full-on, coordinated assault hitting the industry from every possible angle. So let's break down the first and maybe the most powerful weapon in this attack.
The government has passed new reforms to basically outlaw open-pit mining. Now, to you and me, that might sound like a good thing for the environment, right? But for the silver industry, it is a catastrophe. 60%, let me say that again, 60% of all of Mexico's silver comes from these exact mines. Banning the method is pretty much the same as banning the metal itself.
And this brings us right to the second threat, what we're calling the fiscal trap. For the mines that are still allowed to operate, the government is jacking up taxes so high they can't make a profit. This forces them into this really dangerous practice called high grading. It's like a farmer eating his seed corn to survive the winter. They're just gutting the mine of its richest ore to pay the bills today, completely destroying its future in the process.
Now, the third threat, well, you're not going to find this one on any official government report or company balance sheet. It's the physical siege by organized crime. The cartels. They figured out that silver is often a whole lot easier to move and sell than drugs. So they extort, they steal, they hijack. They're adding this massive, unspoken shadow tax to the cost of doing business.
Okay, so here's where it gets really interesting. With the industry being dismantled piece by piece, you'd think exports would be collapsing, right? But if you just look at the raw tonnage of material leaving Mexican ports, the numbers don't show a total shutdown. And that leads to a really important question.
I mean, think about it. If it's not going into the COMEX vaults in New York or the LBMA vaults in London, and we know both of those are draining, then where in the world is it headed? Well, the answer reveals this stunning geopolitical play that is completely, and I mean completely, bypassing the entire Western market.
The secret is that China isn't buying shiny silver bars. They're buying this stuff, concentrate. It's basically just raw, unprocessed ore. Think of it like a muddy sludge mixed with other metals like lead and zinc. Refineries in the West, they aren't even equipped to handle this stuff. But China? They've quietly built a massive industrial machine specifically to process it.
So this slide here, it shows you exactly how this whole new system works. On the left, that's the old way things were done. And on the right, that's the new reality. The entire physical pipeline for a quarter of the world's silver is being rerouted. The metal gets dug up in Mexico, loaded onto a ship as mud, and sent straight to China. It never even gets a chance to see a Western vault.
And what this creates is a really dangerous illusion we call phantom supply. The big Western futures markets, like the COMEX, they're setting prices based on the idea that all this Mexican silver is available to them. But it's not. It's gone. They are literally trading paper contracts for a physical supply that has already been sold and shipped to the East. They're pricing a ghost. By the way, if you're finding this explainer valuable, please take a second to like, share, and subscribe. That's the best way to make sure you won't miss any of our future updates. Okay, now back to the investigation.
So, let's recap. We've laid out all the evidence.
a legal ban, a fiscal trap, a cartel siege, and a secret geopolitical pivot to China. Now it's time to connect all those dots to what it means for the price of silver.
To really understand what's coming, you have to get this one term, inelastic demand. It just means you can't kill this kind of demand. A company like Samsung can't just wake up and decide to use less silver in their phones. The solar industry can't build panels without it. It's not optional. They have to buy it, no matter what the price tag says.
So what happens when that unstoppable demand slams head-on into a 25% supply cut? Well, our forecast, based on the source material, shows that when this open-pit mining ban is fully enforced around 2026, the new floor price, the absolute rock-bottom price to get your hands on physical silver, is going to shift to $50 an ounce.
And the breakout price, the point where those big industrial users start to truly panic about their supply chains and begin hoarding everything they can find, that becomes $100 an ounce. It's simple, really. When you ban the cheap, easy-to-get-at silver, the world has no choice but to pay up for the expensive, hard-to-mine silver that's left.
But you know, beyond just the spot price of silver, there is one very specific, very famous asset that is directly in the crosshairs of this crisis. And it's a story that every single coin collector out there needs to hear.
Here's the kicker that most people don't know. The official Mexican mint, the one that makes that beautiful Libertad coin, it doesn't own any mines. It has to go out and buy its silver on the open market from the very same companies that are now being shut down. So when their supply gets cut off, you can bet the first thing to go will be making bullion coins for retail.
And what that means is that the Mexican Libertads you might have sitting in a safe right now could transform overnight. They would stop being simple bullion, valued just for their silver content, and become true collector's items, valued for their scarcity, almost like a relic from a lost chapter in history.
So we've presented all the forensic evidence from our source material. A 500-year era of Mexican silver dominance looks like it's coming to an end, and it's being engineered from the inside. The supply chain is fundamentally broken, and the market, well, it just hasn't felt the full impact yet. The final verdict, as always, is yours to consider.